What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 38. It's August the 2nd, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about all of the important levels that we have on the chart today. So you can't really see it because we're so far down below yesterday's closing price, but yesterday's closing price was 35,755. So if you notice where we came into where the screenshot started, we were way below that, more than 100 points below. So anytime you're below the closing price by triple digits, it pretty much tells you that the chances of you seeing a significant downtrend that day increase. It doesn't mean that that'll necessarily happen all the time 100%, but it does definitely raise the probability. Now let's go ahead and get into our analysis, and let's start a little bit from the pre-market, because this is going back to what I just said, where I said, it doesn't always lead to a downtrend, or at least not immediately, meaning that you always need to trade what's in front of you. You can have an idea about what you would like to do, like, oh, okay, we're in a downtrend overall, so I'm looking for short setups. But if the market starts telling you that it wants to move to the upside and is giving you all of the signals that you need, then you want to follow suit. And I think that's what I was able to do right here when the market opened. So let's start our analysis a little bit before 9:30 at 8:50 right here, where we come back up to retest 35,620. This was a level of resistance that was drawn from a previous level of support a little bit earlier at around like 7 o'clock. So we start here, we see a lower high, put the bear trend line on there. We see prices move down, eventually establish a zone, consolidate for a while. We establish a triple bottom where we have one test, two tests, and three tests. And after that third test, we created a higher low. So after that higher low, we see prices push above, break above the zone, and then we come into the market open right at 9:30. As soon as the market opened, we pushed back. We almost tested that wick. This wick almost retested this higher low, but it wasn't quite strong enough to get all the way back down there. Buying strength came in. We see prices come all the way back up. They closed below resistance, but they wicked all the way up to the top of the zone. So even though they had all that momentum, that's still telling us that it's still a high level of sellers up here, and they're willing to push the market down still. And that's exactly what we saw. We saw prices come all the way back down, retest the zone one more time. But look at what happened on this lowest wick right here. If you follow it across, we came back to retest that higher low. So anytime you have signals of a uptrend starting to form a little bit, where we had our triple bottom, higher low, and then we came back to retest those higher lows multiple times, and we still were able to bounce off of them, even though we had all of this momentum coming into that level. That's telling you that buyers are definitely present at these levels down here where that higher low was established, which means that the trend is legit for that time period, and you can still look to go long in the future, the immediate future. So after we have that wick established, we see prices break back above the zone one more time, come back, retest it on this last wick, and then from that point forward, we moved higher, came all the way back, retested resistance once more, created another higher low. So we're seeing a series of multiple higher lows, which just confirms that the uptrend is definitely strong for this time and this period in the market right now. So once we break above resistance successfully and we establish another higher low, I look to go long as prices came back to retest that support level. So anytime I see markets trending up, that's usually the strategy, one of my favorite go-tos that I like to utilize in the market, where I wait for prices to come back and retest the support level at a higher low, and then that's when I get in. So right here I did a good job. I had a good entry. When it comes to this setup, the best entry is usually from the lowest point on the wick. The only thing is that sometimes if you buy from the lowest price on the wick, your order might not get filled. But if you try and be too aggressive and buy it from the body, sometimes it might come out and stop you out near the wick and then move in your direction. So you really want to find the sweet spot, and I've learned that that's kind of somewhere in between the body and the wick. So that's exactly where I was able to get into right here, kind of right in between that area. And I was able to simply take it back up to the top of resistance. Now I took profits right here because these past couple of days I've really been learning, tough lessons about taking profits, because I've been getting greedy and I've been thinking that I can just let my trades run forever and I don't have to lock in profit. But that's not the case. Nothing lasts forever, and whenever you have good opportunity in front of you, you got to capitalize on that. So that's what I was able to do. That's what I was able to do right here. And you might look at this chart from the naked eye and say, Ty, you could have held that trade all the way to the top of the zone. Now it might seem that way, but that's actually not the case, because when I trade, I use a 20 to 25 point profit target, and then my break even stop loss gets triggered when prices move halfway towards that target. So if they either get 10 points or 12 points, depending on which one I'm using, the break even stop will get triggered. So the high for this actual candle that I took profit on was 32. So my break even was triggered. So if prices came back on this next candle, they would have came all the way back right to my entry. I got in at, let me see, let me look at the live chart. So hold on. So on trade one, I went long at 16, and the high for this candle was 32. We look at that next candle over that I'm talking about. The low was 35,616. So it would have came back exactly to my entry price. It would have stopped me out for break even, and then it would have moved on to hit my profit target within the same 60-second period, which would have been very frustrating. And I learned from yesterday that sometimes frustration can lead you down the wrong road, because you start trying to take revenge trades, you start trying to overcompensate, and it's certain ways that you can deal with that stress. So I think I probably would have made the right decision and not revenge traded in that scenario. But you don't even want to open that door to even be able to look down that road where you say, oh man, I might have went down the wrong path. You got to understand your triggers as a trader. And for me, one of the biggest triggers that leads to me making bad decisions is having a trade that should have went my way, but it didn't. Not because the market had something out against me, but because my execution just wasn't as good as it could have been. It's super frustrating. So I think it's good to make the right decisions initially, because then you don't even have to open that can of what could possibly happen after you start having to take frustrating losses. So I think I did a really good job on trade one. I learned my lessons from yesterday, and I came in today and I just wanted to do the right thing. So I stayed on that path for trade one. So after trade one was profitable, we see prices break back down below resistance, create a lower high. And then from that point forward, we came back to retest that lower high. If we were to extend a level of resistance across that, we would see prices come back right here and intersect that level. So once we saw that rejection, that's where I started to draw my bear trend line. So I took this swing high, and then I took the edge of this little 3 candle consolidation period, used that as my lower high, and then extended that throughout the market and used it as a reference point to go short from throughout the rest of the day. So that's exactly what led me to trade number 2. So let's read the notes. I shorted here as prices came back to retest the intersection of the bear trend line and the resistance level above. So this resistance level, this blue line right here, was actually drawn off a level of support, right, from around 850. And then as the market environment changed and we got below that price, that same level now became resistance that I used to go short from. So once prices came back up to touch that bear trend line, they moved away from it. I saw that they're moving their way down back below resistance. That's when I got in. Now right here, I did exit towards the lows of these wicks right here. And you're probably saying, Ty, you might have been able to hold that trade down to the bottom of the zone. And you know what's crazy? I was thinking the same thing during the moment. But the one thing that stuck with me the most throughout all of my lessons that I learned over these past weeks about taking my profits when they're there is that if you have an idea about where prices should go, but there's a level that makes more sense before they get to that idea that you had, you should just take profits at those levels. You know, sometimes it'll happen like it does today where it goes to that level that you initially thought. But if you take profit at the level that makes sense, you can't even be mad, because you had a good entry. The market came back to a destination that made sense, and you took profit. Remember what I said earlier, nothing lasts forever in the market. So if you have an opportunity to take some good profit, go ahead and lock that in. So that's exactly what I was able to do at trade 2. And I just think that that's a very good example of why you got to stick to your trading plan. Now, my trading plan really is me coming into the market, making a few good trades here and there, like maybe 2, 3, or 4. And then I'm done for the day. I go home, I study, run it back, and come back the next day again, ready to do it once more. That's how I like to operate in the market. Now, yesterday I got a little bit away from my trading plan because I traded from 9:30 in the morning until about 2:30 in the afternoon, which is way too long for me to be trading, because when I trade the 1 minute chart, it's very hectic and it's a lot that happens and it's a lot that goes on. It's small details and new information that gets presented to you on almost every single candle. And in the span of 5 minutes, like we saw up here at this ultimate swing high, in the span of 5 minutes, you can go from being in a decent uptrend to being in a decent downtrend. And if you're not able to adapt and notice all of the small details that are giving you the signals that the market has changed, it'll be very detrimental to your trading account. So in order to be able to recognize all of these things, you have to have a pretty much a 110% level of focus. You have to be all the way locked in. And for me, I can only maintain that for maybe an hour and a half to like 2 hours. So that's my sweet spot. So I came in today and I got back to what I know. It's a lot of trades to be had, a lot of opportunity throughout the day, but I'm here to get mine. I'm not here to get all of it. No, just here to get mine. And once I do that, then I call it a day and I come back and try and do it again later on. So I think today I did a really good job of just sticking to the plan. And when you stick to your plan, sometimes you'll be very happy and very surprised at the results that you get. So I would say overall, that was one of the biggest things I learned today. Just stick to your plan. It doesn't matter what happens after your trade is over, because you can look at both of my trades today and say, wow, Todd, it was more to be had after your trade was over. But you don't have to worry about what happened after your trade. You don't have to worry about what happened before your trade. All you have to do is focus on the trade that you have and maximizing that trade to the best of your ability according to your trading plan. So that's the biggest lesson I wanted to convey with you guys today, and the biggest lesson that I learned. And before we get out of here, I just wanted to talk about this one last note that I had at the top of the chart. It says bear trend lines work better on down days. Now everybody is probably reading that and saying, well, yeah, that just makes sense. And I agree with you 100% wholeheartedly. But here's the thing. We have a tendency as humans to remember all of the complex things where we say, oh, we need to get into this setup when we see 1, 2, 3, and 4, but it also has to be this type of day in this type of week in this type of market environment during earnings season. That's a very complicated thing to remember, but you're more likely to remember that because it's so detailed. But when it comes to little simple things like this, like a bear trend line works better on a bear day, we have a tendency to just overlook that because we just assume that as humans, oh yeah, that's so simple, I'm not going to forget that. But if you have 1,000 other things to remember, how do you know that you're not going to skip over something so fundamental and so simple? Because something so simple as this could really throw you off. Because if we go back to last Friday on July 28th, I learned so much about bear trend lines on this day, because I tried multiple times to use a bear trend line, but we were in an uptrend. And using a bear trend line in an uptrend, even though you might have all of the characteristics for a bear trend line, you have your swing high, you have your lower high, you see your lower lows getting formed, so you draw your bear trend line. But you're ignoring the fact that the overall market is up. That's such a simple concept, but it makes such a difference, because if you look at this day on July 28th, I drew a bear trend line right here because I saw swing high, lower highs, and lower lows, right? Now, luckily, I didn't go short off of this one, but I was just watching it, and I was so confused when it happened because I'm used to that bear trend line working, but I wasn't paying attention to the overall market context. So I was really confused, like, wow, it really just said, forget about your trend line. And then we see prices come back when the market opened. They created a double top right here and a lower high. So what did I do? Extended my trend line across. But if you look at trades 2 through 5, I took losses on almost all of these except for number 4 when I actually went long. But every time I went short trying to expect this bear trend line to hold up, I was extremely wrong. And if you see, the bear trend line really didn't start working until later on in the session, after we established this head and shoulders top that led to a strong down move. Eventually we came back up to retest where that strong down move started from. We created a lower high at that same level, pushed down, created another lower high, right? Well, excuse me, we created a double top at this level, pushed down, created a lower high, we gapped down, and then came back to retest the lower high one more time by way of a double top. So in a scenario like that where everything is pointing to the downside, it makes 100% sense to actually use a bear trend line, because we're in a bear trend, so it makes sense. Everything lines up. So it's just the little simple things that make such a big difference. Remember, Bear trend lines work on bear days. Now, on the flip side, all of your long entry strategies that you like to use, those work better on up days. So always remember, even though it might be something so simple, you don't want to just skip over and just assume that you can automatically remember those things. You got to practice every single fundamental. It's kind of like playing sports. Like if you play basketball, you don't want to just think that because you already know how to dribble that you never have to practice that because it's such a simple thing, right? Just bounce the ball. Nah, it's a fundamental part of the game. So even though you might have other more complex things that you learn, you still got to start with the fundamentals. So that's the biggest lesson I wanted to share with you guys today. And I really hope you was able to learn something today because I definitely did. I'll be back tomorrow on August 3rd from anywhere between 9:30 to 9:40, ready to run it back. But until then, you guys, take it easy.